Welcome back to Explain the Charts, where we dissect the markets, one chart at a time. Today, September 23rd, we're taking a deep dive into the USDCAD, examining the recent news impacting this currency pair and analyzing the chart data to uncover potential trends, reversals, and key price levels to watch. Buckle up as we explore the reasons for potential bullish or bearish sentiment, short and long-term trading opportunities, and other crucial factors to consider when making trading decisions. First, let's dive into the current events surrounding the USDCAD. Recent news suggests that the Canadian dollar is vulnerable to option expiries and is consolidating yesterday's gains. Traders are looking at the prevailing US dollar sentiment and its potential impact on the Canadian dollar. The Bank of Canada Governor Tiff Macklem's speech on Tuesday is expected to provide guidance on interest rate cuts, which could heavily influence the Canadian dollar's direction. The preliminary US S&P Global PMI data for September, expected to be released this week, could also offer valuable insights into the future trajectory of USDCAD. Now, let's turn our attention to the charts, starting with the one-day chart of USDCAD. On the daily chart, we can observe a clear trend of consolidation, with the price action ranging between 1.34 and 1.36 for the past month. This sideways movement indicates a lack of clear direction and suggests a potential period of indecision in the market. Looking at the recent candles, we see a slight bullish bias, with the last few candles closing above the previous ones, suggesting a potential shift in momentum. However, it's crucial to note that this bullish move is still relatively modest and might be a temporary surge. To gain a better understanding of the short-term dynamics, let's switch to the one-hour chart of USDCAD. The one-hour chart presents a more volatile picture, with a clear pattern of up and down movement within the broader consolidation range. We can observe a series of higher highs and higher lows, indicating potential bullish momentum, particularly noticeable in the last 3 to 4 hours of trading. However, it's important to remember that this bullish trend is still within the larger consolidation range, suggesting it might not be sustainable for a long time. It's possible that we're experiencing a temporary upward swing within the broader sideways movement. Analyzing the support and resistance levels, we find that the 1.34 level acts as a significant support zone, as the price has consistently bounced off it in recent weeks. Conversely, the 1.36 level acts as a resistance barrier, as the price has failed to break above it for the past few weeks. These support and resistance levels represent important areas to watch, as they can indicate potential turning points in the market. Looking ahead, the key price levels to focus on are 1.34 for support and 1.36 for resistance. If the price breaks below the 1.34 support, it could signal a bearish reversal and potentially push the price lower, possibly towards the 1.33 level. Conversely, if the price breaks above the 1.36 resistance, it could signal a bullish breakout and potentially drive the price higher, possibly towards the 1.37 level. The likelihood of these predictions depends on various factors, including the outcome of the Bank of Canada's upcoming interest rate announcement, the release of the US PMI data, and overall market sentiment. If the Bank of Canada signals further interest rate cuts, it could weaken the Canadian dollar, making the bearish scenario more likely. Conversely, a more hawkish stance from the Bank of Canada could support the Canadian dollar, making the bullish scenario more likely. A strong US PMI reading could also bolster the US dollar, potentially pushing USDCAD higher, while a weak PMI reading could have the opposite effect. In the short term, the bullish momentum on the one-hour chart suggests that the price could move towards the 1.36 resistance level. However, the larger consolidation range suggests that this move might not be sustainable. A break above the 1.36 resistance would strengthen the bullish case, while a failure to break through it could signal a potential pullback toward the 1.34 support level. In the long term, the overall consolidation pattern suggests that USDCAD might remain in a sideways range for a while. The direction of the breakout will be crucial for long-term traders. A bullish breakout above the 1.36 resistance could open up significant upside potential, while a bearish breakout below the 1.34 support could lead to further downside movement. In conclusion, USDCAD is currently in a period of consolidation with no clear direction in the market. The key price levels to watch are 1.34 for support and 1.36 for resistance. The Bank of Canada's interest rate announcement and the US PMI data will be crucial factors to watch in the upcoming days. A break above 1.36 could signal a bullish breakout, while a break below 1.34 could signal a bearish reversal. Stay tuned for further analysis and updates as the market unfolds. Remember, this is not financial advice. Always consult with a qualified financial advisor before making any trading decisions.